Bitcoin is supposed to be the peaceful revolution, right? Well, apparently the peaceful revolution just turned into a full-blown civil war. We've got Bitcoin Core on one side, funded by Jack Dorsey, loved by Larry Fink, super friendly to Wall Street ETFs, and on the other side, we've got Bitcoin Knots, basically a group of plebs and OG devs saying, nah bro, stop turning Bitcoin into a data dumpster and keep it about money. And now people are asking, is this the biggest threat to Bitcoin since the 2016 block size wars? Are we about to have a hard fork? Who the hell is Luke Dash Jr. and why the hell is he suddenly the Che Guevara of Bitcoin? Don't worry, we're gonna break it down, roast everybody, and then let you decide. Why, you ask? 'Cause f*** 'em, that's why.
'Cause f*** 'em, that's why.
I'm Sophie, this is Bitcoin Simply. Let's go. Segment 1. What the f*** is the Bitcoin Civil War? Alright, this isn't just another bullish news day. We've got civil war brewing inside of Bitcoin, and no one's really even talking about it. On one side, you've got Bitcoin Core backed by MIT, Jack Dorsey, and apparently Larry You Will Own Nothing Fink. 83% of the network is running it. On the other side, a growing army of plebs running Bitcoin Knots, basically the rogue rebel version of Core that's saying, nah bro, no JPEGs, no spam, Bitcoin is money. Knots went from 5% to above 17% of all nodes in a few months. That's a rebellion. Core side is like, stop spreading FUD. All transactions with fees are valid. Go touch grass. And the not side is like, Bitcoin is under attack by scammers, compromised core devs, bad miners like Mara. If we don't fight back, our kids will be fiat slaves. And this isn't just a dev disagreement. It could be a block size war 2.0, except this time the question isn't big blocks versus small blocks. It's, are we building sound money, or are we turning Bitcoin into a data dumpster so Larry Fink can pump his ETF fees? All right, let me break this down like you're 5, or like you're one of those "my NFTs bring adoption" bros. Imagine Bitcoin is a giant Google Doc we all share. Bitcoin Core lets you post GIFs, memes, and random junk into the margins, as long as you pay the fee. And Bitcoin Knots deletes the junk and says, hey man, this is a ledger, not Instagram. Both Core and Knots validate the exact same Bitcoin blockchain, time chain for the based. They both follow consensus rules. The only difference is what they choose to relay to other nodes. Core is more inclusive.
Imagination.
Okay, permissive. Everything with a fee is valid. Knots is strict. Only monetary transactions, take your JPEGs and shove it.
If you're trying to jam, the network starts getting really expensive really fast. Which brings up an interesting question. What is a spam transaction? What is a legitimate transaction? What is an illegitimate transaction? There are 2 ways to answer this. One is a paternalistic, top-down approach that says, this is what is allowed, this is what is not allowed, and by making a list, we will prevent the network from filling to capacity. But that breaks the fundamental capability of Bitcoin, which is net neutrality. Bitcoin doesn't care who the sender or the receiver is, what the application is, what the value of the transaction is. All it cares about is, did you pay the fee? And if you paid the fee, your transaction is legitimate by definition, because you thought it was legitimate enough to attach that fee. The very act of paying the fee legitimizes the transaction, because if we start making decisions about what is spam and what is not, we are now choosing the future of Bitcoin and constraining it into a set of applications that we can imagine. And the brilliant person who creates the application we can't imagine, that may look like spam to us, doesn't get carried across the network because we made a top-down decision to say that transaction is illegitimate. And the other way of doing this is to say, how about we use a market to solve this problem? We have a market, we have a currency, use the market to solve this problem, and allow the market to establish the minimum fee that meets the requirements of supply through the miners and their need for propagating blocks fast, and the demand of the users for the applications they care about. And if you pay the fee, your transaction is legitimate. There is no spam transaction. There is no such thing as an illegitimate transaction. There are only transactions that did get mined and transactions that didn't have enough fee to get mined. And so this is how Bitcoin is going to play out. And this is not going to be solved. It's not going to be solved because we will have the scaling discussion every year for decades into the future, hopefully. And every year we will fail to scale for the next application and succeed to scale for the previous ones. And as soon as we do better, people will invent new applications and we will fail to scale again. The internet, failing to scale gracefully for 25 years. Bitcoin, let's keep failing to scale gracefully. And Bitcoin is not yet dead. Thank you.
And yes, before anyone gets triggered, Knots is still basically 99% core code. It's just patched by one dude, Luke Dasher. Luke Dasher. I am so f***ing up that name. I'm sorry, Luke Dasher.
A few moments later.
Luke Dash Jr.? Is it Luke Dash Jr.? I'm sorry, I'm new here. It's like Fight Club, and he's coding in his basement with a broken GPG key and a tinfoil hat. Core devs then respond with that classic, "Herder, you plebs don't understand the protocol," while conveniently forgetting that Core itself has filtered spam for over a decade.
There's a suspicious new kind of attack that sits in this sweet spot of three different ways. The three main ways you can store arbitrary data in Bitcoin. You can either use the inscriptions hack, which is amazing for people trying to store JPEGs and stuff, because they're storing so much data that they can sneak into the witness section of a transaction, and witness data gets a 75% discount in Bitcoin, and they get to make disproportionate use of that. But these guys aren't using that much, but they're also using too much to use op return, so they create fake pub keys, which are the most harmful form of spam in Bitcoin. And this is where it starts to contradict itself. They can't use op return because there's a bunch of spam filters preventing them from using op return, and they in theory really want to use op return because it's a bit cheaper than creating fake pub key outs. And the gaslighting comes in the shape of, well, we need to get rid of the filters on op return because then they'll use that, in the context of having said for years there's nothing we can do about spam because spam filters don't work. So that is the contradiction here that's being so annoying for everyone to witness, because it feels like we can only ever acknowledge they work in service of relaxing filters to help spammers out. We can never acknowledge they work to prevent spammers from coming and destroying the whole, blowing up the UTXO set in the first place, because even witness discount abuse still blows up the UTXO set. It's not with fake pub key outs, but they still create millions of outputs, and they took us from 80 million outs to 200 million outs in 2 years, and just blew up the UTXO set, and suddenly a whole bunch of hardware couldn't run nodes anymore. And that was like an unmitigated attack that created a lot of problems, that was self-declared. The people that did it said, we want to create as much damage as possible. A lot of that was like, if I say that, it will annoy people and my video will blow up. So it was outrage marketing, but it was still true, and it did do that. So yeah, you got those three types of arbitrary data storage, and one of them is the theory is that they will shift from doing one to the other, which is less harmful. But the one level below that is, why aren't they doing that already if the filters that are preventing them from doing it are so ineffective? And then there's a bunch of, then there's like a laundry list of reasons that are offered, none of which work, but it's sort of that psychological thing where if I give you 50 bad reasons, you just sort of go, all right, I'll let you do it. Like, even if you had one good reason, that would be enough, but none of them are good on their own. They don't stand up. Like, oh, your fee estimation on your node won't work right if you don't go along with it, and small mining pools will struggle, and what's the other one they have? Well, the other one, the only really legitimate one is bloating the UTXO set, but I don't think anyone's really buying that, because the UTXO set is blowing up anyway with no one caring about it. It's just convenient in this case. So you have this new company, Citria, which is existing in this sweet spot, right? It's not using op return, it's not using the inscriptions hack, it's using fake pub keys, and it's very convenient because that means, now we get to nuke a filter for the good of Bitcoin. And anyone that complains about it doesn't like Bitcoin or is too technically unsophisticated to understand what's going on here, but the implications of it basically mean we just need to work with spammers and modify Bitcoin as necessary to suit them, otherwise they will hurt us. And this is just pathetic and not true, and completely sets a ridiculous precedent that was never satisfactory before.
Bottom line, this isn't entirely a software debate, it's a philosophical one. Are nodes supposed to maximize miner profits or protect the rules of sound money? Look, spam attacks aren't new. Back in 2016, we had Roger Ver, Jihan Wu, and Bcash gang flooding the chain with garbage to force bigger blocks. Spoiler, Bitcoin survived. But now, we're dealing with a new loophole. Spammers are injecting arbitrary data into the blocks. It's just small enough to avoid using the filters, but big enough to bloat the UTFO set and push node costs through the roof. That means hardware goes from $200 a Pi to $1,000 plus for a server. Initial block download goes from a few days to multiple weeks. You know who loves that? Larry Fink, the guy who literally said, we will force behaviors.
You now make a point of, that's an investment criteria for you.
Well, behaviors are going to have to change, and this is one thing we're asking companies. You have to force behaviors, and at BlackRock we are forcing behaviors. 54% of the incoming class are women. We added 4 more points in terms of diverse employment this year, and what we're doing internally is, if you don't achieve these levels of impact, your compensation could be impacted. Okay,
we're doing the same thing.
And so it's just you have to force behaviors, and if you don't force behaviors, whether it's gender or race or just any way you want to say the composition of your team, you're going to be impacted, and that's not recruiting, it is development, as Ken said. And ultimately, it's still going to take time, but I am just as much shocked as Ken is that we have not seen more opportunities, and we're going to have to force change.
And if that's not enough, the BIS wants to start grading sats, literally marking your Bitcoin with a reputation score, like a social credit system. Yikes. Low score equals tainted coins, can't spend them. High score equals nice, clean, friendly CBDC coins. How about you grade
these nuts? Ha! Got him!
Let's be crystal clear. Bitcoin was not built to negotiate with attackers. It was built to ignore them. Once you start bending the protocol every time you find a new spam vector, it stops being trustless and turns into a negotiation table. And that is not why we're here.
In economics, there's no such thing as a free lunch. If you're not paying fees, someone's paying fees. You're either paying them in terms of inflation, you're paying them in terms of giving cartel advantage to a monopoly by centralizing access and control, or you could just pay fees. If we have to decide how transaction gets into block and which transactions should and which transactions shouldn't get into a block because we have limited space, there's really only 2 ways to do that. One is to specify in the software which are good transactions and which are bad transactions, what I euphemistically call a dictatorship of developers. Think about it. If developers get to decide what is a valid transaction that should be prioritized versus which transaction is wasteful or spam or for an irrelevant application that they don't particularly need, we just created a dictatorship of developers. They decide which applications are now allowed on the network simply by controlling that function. There's only one way to correctly price the scarce resource of transaction space or block space in a way that doesn't give anyone control, and that is a market. So fees operate as a market in order to give the freedom of the sender of each transaction to decide for themselves how important this transaction is and how much of a priority it has in their perspective.
Let's connect the dots real quick. BlackRock now controls over 700,000 Bitcoin. Larry Fink just became the interim co-chair of the WEF. Bitcoin Core, the dominant client, is mostly funded indirectly by Wall Street and MIT. You still think it's just a coincidence that Core wants to be more permissive with spam? Meanwhile, the guys running Knots are basically screaming, if we let them normalize spam, JPEGs, and ordinals, next they'll normalize marked coins. And then Bitcoin becomes just another KYC chain controlled by the same people who ruined the dollar. And honestly, they might be right. Because if nodes stop defending what Bitcoin actually is, Wall Street will happily step in and define it for us. Not with a hard fork, but with a slow cultural drift. One GitHub pull request at a time. One spam filter removed. One ETF-friendly update. And then one day we wake up and realize, oh shit, we're running BlackRock Core version 34.0. Not on our watch. Quick reality check. While Larry Fink and the spam mafia try to co-opt Bitcoin, Ledn lets you HODL your Bitcoin without selling it. If you ever need to tap into your Bitcoin's value without selling it, you're holding pristine collateral. That's where Ledn comes in. Ledn has funded over $10 billion in Bitcoin-backed loans since 2018. No monthly payments, no penalties, just pure flexibility. You control your loan. You control your Bitcoin. Collateral is never lent out to generate interest. And every 6 months, proof of reserves. It's simple. If you need cash but don't want to sell your precious corn, Ledn has your back. Check out Ledn. Bitcoin-backed loans done right. Go to learn.ledn.io/simply. The link is in the description, and Simply Bitcoin clients get 25 basis points off on their first loan. And if this civil war has you questioning custody, get over to thebitcoinway.com. They'll walk you through multi-sig, cold storage, privacy, basically how to stay sovereign in a world full of Larry Finks. Don't just talk about decentralization, actually practice it. Visit thebitcoinway.com and take back your financial sovereignty. You can schedule a free 30-minute consultation today using that link in the show notes. So where does this leave us? It's simple. If you want Bitcoin to become a Wall Street compliance chain where miners chase cheap profits and Larry Fink decides which sats are clean, run Bitcoin Core 30 and pray they don't drop Core 31. ESG edition. But if you believe Bitcoin is supposed to be sound money, permissionless, uncontrollable, and incorruptible, run Knots or any other version of Core before 30. Build your own template with Ocean or Datum. Run a node that actually protects the rules, not sells them out. Because Satoshi didn't build Bitcoin so that we could negotiate with attackers. He built it so we could ignore them. Nodes enforce the rules. So spin one up. Run what you believe in. And if someone doesn't like it, do it anyway. Why?
Because them, that's why.
Oh, and if you want to talk about this in person, catch us at Mining Disrupt 2025 and get a taste of what the future holds. The world's biggest Bitcoin mining conference, live demos, insane new rigs, and the people who are literally securing the network are headed to Dallas, Texas, November 11th through the 13th. Meet the legends building the hash power revolution, from sovereign mining to AI plus Bitcoin integration. Meet a lot of the people you saw in today's video and prepare to have your mind blown. Grab those tickets today, come to see the Simply Bitcoin team on the news desk, and don't forget to use promo code SimplyBitcoin for 20% off. That's it for today's show. Don't forget to like, subscribe, and share this video with your friends. And set those notifications for the best in Bitcoin news delivered to you daily. I'm Sophie. This is Bitcoin Simply. And as always, happy stacking.